Bitcoin is defending the $60,000 level, but global political tension and oil prices are keeping investors nervous about whether this price floor will hold. Wednesday, June 10, 2026. Like and subscribe for daily market updates. Today's agenda: the big picture, market snapshot, why prices move, Iran and oil risk, ETF Flow Data, is it a bottom? Now let us look at the exact numbers for all major assets right now in our market snapshot chapter. Welcome back to Market Pulse Daily. Today we are looking at a very specific and complex situation in the cryptocurrency market that is causing significant confusion for investors everywhere right now. Bitcoin has managed to stay above $60,000, which sounds like good news on paper, but context matters immensely here. Just because the price hasn't crashed yet does not mean all danger has passed or that stability is guaranteed. We need to look closely at why this specific number represents a critical psychological and technical floor right now. The main reason we are seeing these volatile moves today is actually a combination of three very different, powerful forces happening simultaneously around the global economy. First, there is renewed global political tension between nations in the Middle East involving Iran and crucial oil supply chains. Second, rising prices for energy like crude oil make people worry about inflation resurfacing again. And third, when interest rates stay high or potentially go higher due to these fears, it becomes much harder to find available cash in the market that investors want to put into risky assets like crypto today. Now we need to explain exactly why these numbers are moving the way they are in our Why Crypto is Moving Today chapter. Let us pause and look at exactly where everything stands right now in the global markets. This is important because you cannot make good decisions without knowing these specific numbers first. Bitcoin is currently trading around $61,300, which means it has dropped about 3.2% since yesterday, after hitting a high of roughly $63,450 today. Ethereum is sitting at $1,626 and has fallen slightly more than Bitcoin by 3.6% over the same time period. Solana is down nearly 5% to around $64, showing that smaller coins are falling faster when investors get scared. The total value of all cryptocurrencies together is about $2.19 trillion, which is a decline of roughly 3% in just the last 24 hours. We also see stablecoin market cap at $132 billion, which tells us people have cash ready to buy if prices drop further. We must understand exactly how this situation involving Iran connects directly to your digital wallet in our next section. It is very easy to look at a chart and see that Bitcoin went up or down by 1%, but understanding why it moved requires looking much deeper than just the price line on your screen. The main reason prices are moving today does not come from any news story specifically about digital coins alone. Instead, the movement comes from big-picture economic chains happening in the real-world economy right now. When there is a threat of conflict involving Iran and oil supplies getting cut off, the cost of energy goes up globally. Higher costs for gas and fuel mean that inflation stays high because prices for food and goods rise everywhere. If inflation stays high, central banks will not lower interest rates quickly to help growth. This keeps borrowing expensive, which reduces available cash in the market needed to buy crypto assets today. Even though the price is holding, we must look at whether big institutions are actually buying in our ETF flows section next. The situation involving Iran matters for your crypto portfolio because it directly affects how much money is available globally to buy digital assets right now. News reports indicate that there has been renewed tension between nations, with threats of military escalation and fears about supply lines being disrupted in the Middle East region. When oil prices stay high like they are currently at $92 per barrel, investors worry that inflation will not go away soon enough for central banks to act comfortably. This keeps interest rates higher than many people would prefer, which drains money out of risky investments, including cryptocurrencies today. The key thing you need to understand is that the risk comes from the possibility of supply disruption rather than a confirmed full blockade happening right now at this exact moment. Now let us look at whether the market has truly found its lowest point in our Is the Bottom in chapter next. One of the most important reasons we are not calling this a confirmed bottom yet is what big institutions have been doing with their money recently according to data trackers. We see that there was actually an outflow or selling pressure from Bitcoin exchange, traded funds on June 5th, and another negative print later in the week, which means large investors sold some shares despite recent price gains today. This tells us that institutional demand has not fully returned yet, because one positive day does not change long-term behavior patterns of big money managers immediately. Ethereum looks slightly better with net inflows recently, but this is not enough to prove the entire market has turned around completely just based on these numbers alone. Finally, let us look at what you should actually do with your money in our What This Means for Investors chapter next. The honest answer to the question of whether we have found a bottom is no, because there are still too many challenges remaining for us to say that with certainty right now. What we actually see happening today is an attempt by Bitcoin to build support at $60,000, but it has not fully confirmed this level as a permanent floor, yet before prices drop again tomorrow or next week. A true bottom requires more than just holding the price line on one day, because markets often test levels multiple times before stabilizing completely after a major decline, like we have seen recently over the last few months. To wrap up our analysis for Wednesday, June 10th, we need to be very clear about what the market is telling us right now, without using confusing jargon or technical terms that might confuse you if you are new to this space. Bitcoin has managed to stay above $60,000, which sounds like a victory, but it does not mean all danger has passed completely yet, because global oil prices and interest rates remain high enough to drain available cash from the market today. Thanks for watching Market Pulse Daily.